Right now, Americans owe $1.66 trillion in car loans. And here's what nobody's talking about. That monthly car payment you think is normal? It's the single biggest wealth killer in your financial life. And today, I'm going to show you exactly how the trap works, why it's so hard to escape, and what to do instead. Let me give you the real numbers. The average new car payment in America right now is $772 a month. For used cars, it's $532. And get this, more than 20% of new car buyers are now paying over $1,000 a month just for the car loan. That's a mortgage in some parts of the country, except your house goes up in value. Your car doesn't. But the car payment isn't even the full picture. Add in full coverage insurance, which now averages $191 a month. Add gas. Add maintenance. According to USA Today, total car ownership costs are approaching $1,000 a month in 2026. Think about that. $1,000 a month disappearing from your life, mostly going towards something that's losing value every single day you own it. But here's where it gets really ugly. The average car loan now stretches to 69 months. That's nearly 6 years. And 84-month loans, that's 7 full years, now make up 22% of all new car loans. That's a record. People are signing up for 7 years of payments on something that loses value the second they drive it off the lot. So let me break down what's actually happening to your money. You buy a $50,000 car. That's right around the current average new car price. You finance it at 6.5%, which is the average rate for someone with good credit. Over 72 months, you're paying roughly $58,500 total. That's $8,500 just in interest. But meanwhile, your car has lost about 60% of its value. So after 6 years of payments, you own a vehicle worth maybe $20,000, and you paid nearly $60,000 for it. You lost $40,000. And that's the best-case scenario. If your credit isn't great, you could be paying 13% or even 19% interest. At those rates, you might pay $70,000 or more for that same $50,000 car. Now multiply this across a lifetime. Most people buy a car every 5 to 6 years. If you start at age 25 and keep that cycle going until you're 65, that's roughly 7 or 8 cars. At $772 a month, you'll spend over $370,000 on car payments alone over your lifetime. If you invested that same $772 a month into an index fund averaging 10% annual returns, after 40 years, you'd have over $5 million. That's the real cost of your car payment. It's not $772 a month. It's millions of dollars you'll never build. And this is the trap nobody talks about. The car industry doesn't sell you a car. They sell you a monthly payment. The dealer doesn't ask, how much can you afford for a car? They ask, what monthly payment works for you? And then they stretch the loan longer and longer to make any car seem affordable. That $772 feels manageable, but 7 years of it? That's financial quicksand. And here's the part that makes the trap almost impossible to escape. Nearly 30% of people trading in their car toward a new purchase are underwater on their loan. That means they owe more than the car is worth. The average amount of that negative equity just hit a record $7,214, according to Edmunds. So what happens? They roll that debt into the next car loan. Now they're financing $50,000 for a car, plus $7,000 they still owe on the last one. The hole gets deeper every single time. It's a debt cycle designed to keep you paying forever. The proof is everywhere. Car repossessions surged 43% between 2022 and 2024, hitting 1.73 million vehicles, the highest since 2009. Subprime auto loan delinquency rates just hit 6.9%, surpassing Great Recession levels. A record number of Americans are falling behind on their car payments. This isn't a coincidence. People are buying cars they can't really afford because the monthly payment was designed to trick them into thinking they could. So, what do you actually do about this? Here's the playbook. Step 1. Stop thinking in monthly payments. Think in total cost. When someone says $500 a month for 84 months, that's $42,000 total. Say that number out loud before you sign anything. It changes the way your brain processes the deal. Step 2. Follow the 20-4-10 rule. Put at least 20% down. Finance for no more than 4 years. And make sure your total car expenses, payment, insurance, gas, maintenance, don't exceed 10% of your gross monthly income. Step 3. Buy used and buy smart. A 2 to 3-year-old car with low miles has already taken its biggest depreciation hit. You can save 30 to 40% off the original price and still get a reliable vehicle with modern features and remaining warranty coverage. Step 4. If you already have a big car payment, refinance. Interest rates for people with good credit are around 4.8% to 6.5% right now. If you're paying more than that, you could save hundreds per month by refinancing. And if you're underwater on your loan, meaning you owe more than the car's worth, do not trade it in. That negative equity just gets rolled into your next loan, and the trap gets deeper. Step 5. Build toward paying cash for cars. I know that sounds extreme, but here's how it works. Once your current car is paid off, keep driving it. Take that old payment amount and put it into a high-yield savings account or investment account every single month. In 3 to 4 years, you'll have enough to buy your next car outright, with 0 interest, 0 payments, and 0 stress. The car payment trap works because it's invisible. It hides inside a monthly budget line that everyone accepts as normal. But $772 a month is not normal. It's not necessary, and it's costing you your financial future. Every dollar you send to a car payment is a dollar that's not building your wealth, not growing in an investment account, not buying your freedom. And the car companies, the dealerships, the lenders, they're all counting on you never doing this math. Now you've done the math. Now you see the trap. The question is, what are you going to do about it? If this changed the way you think about car payments, subscribe to this channel. Share this video with someone who needs to hear it. And remember, your next car doesn't have to be your next financial mistake. Thanks for watching, and I'll see you in the next one.